All right, looks like everybody's here. Given that everybody's here, we're gonna start. In accordance with the governor's order suspending certain provisions of the open meeting law, Mass General Laws, Chapter 30A, Section 20, some meetings are being conducted remotely, like this one. I don't know why we always say this, but there's a link in the agenda. The link would allow you to participate in this meeting. But if you're hearing this, you're probably hearing it on a recording, in which case the link won't work. Either way, we're going to get started. There are two people that are not on the committee that I see in the room. So I'm assuming that both of them have public comment. Why don't we go in alphabetical order according to last name? So, Mr. Passios, if you want to unmute yourself and make a comment, be happy to hear. If you don't have a public comment, then I'll pass to Mr. Terenzini.
Yes, Mr. Chair, I'm just here to observe this evening. Thank you.
All right. Thank you for your observation. I'm sure you will have insights later. Mr. Terenzini, you're up next.
Good evening. Day one for me. Renee took some time with me this afternoon kindly to give me a genesis of what it was all about. Little reading material, and I look forward to working with you over the next few months.
Excellent. Thank you, Mr. Terenzini. Are there any other public comments? If there are no public comments, let's get on to the master revenue document. This
Tony?
is, yep.
Sorry, maybe just for the record, since it's being recorded, we should let everyone know that Carter is the interim town manager. Starting his. Yeah, I thought maybe.
I guess I could have done I guess I could have done a better job on day one.
He started last week, so this is his fourth day.
Well, Mr.
So he's jumping into the fire.
Thank you for doing this, and thank you for joining us tonight. Really, really glad that you were able to hop right in. All right, so let's get on to the master revenue document. Who will be presenting the master revenue document on behalf of the town?
I think maybe Ezzy and I.
All right, we'll do it.
Does that sound good?
Yep.
And Evan, I don't know if Evan had a chance to review it or not, but jump in.
I did.
Oh, okay, that doesn't sound good.
No, it's a long day.
Oh, yeah, they all are.
Mm-hmm.
Oh, okay, I can't pop that out. Let's see.
I'm screen sharing, Renee. Can you see
I see it. Yeah,
just tell me where
it's on
you
my
want
laptop.
Me to, just let me know where you want me to,
okay.
when you want me to advance.
Let me see if I can get it over to my bigger screen, but no. Okay. So yeah, so Ezzy and I worked on this quite a bit last week. Ezzy even worked on Saturday, I know. So using DLS data, pulling together some revenue data and some just general observations that I saw that some could just be absolute rubbish and nonsense and no value, but I wanted to mention them just in case there is anything there that is of value. So the first thing, and I'll go through slides on these, but I saw an inverse relationship between tax levy and state aid. So if you look at the percent of each contribution to the total budget across all towns, independent of the size of their budget, it's like a mirror image. Definite inverse relationship. The other thing I noticed looking at Lunenburg's local receipts, there's a category called miscellaneous non-recurring revenue that dropped off like a cliff 8 years ago and has stayed down. I have no idea what's in that line. I think there's room to improve our investment income looking across to our other towns. And there's a local receipt line that's just called fees. In the past 5 years, the revenue from that line has gone up 46%. Again, I don't know exactly what's included in that line. And then lastly, I looked at new growth. And it looks like even though Lunenburg is having an increase in total new growth, especially in FY23, the residential new growth is not a major contributor to that. So, and it's even more dramatic, I think, in other towns that have more new growth, but it doesn't seem to be coming from residential new growth. So I don't know where that's coming from. So next slide. If we remember last meeting, Heather provided us a list of towns that she used for salary comps for the union and non-union negotiations. And I did a similar exercise, came up with the list. And Ezzy also did a more formula-driven exercise. And here you see the three of us have exactly one town in common, Groton. So, Ezzy's formula, he used Euclidean distance that was based on 1, 2, 3, 4, 5 different criteria you see there. And then he added in nearby communities. I did a sequential filtering based on basically the same criteria that Ezzy used, maybe not in the same order. And I added proximity to Lunenburg and single tax rate at the end of that. So I bias mine on within 2-fold of whatever parameter I use of Lunenburg. So most of the things you'll see Lunenburg kind of in the middle. So I threw out Heather's list just because 3 was too many, and I think Ezzy and I had bigger lists, and between the two of us we had 3 overlap. So we'll see how they look. The next slide shows Ezzy's set and my set. Ezzy's on top, mine's on the bottom. Ezzy has Fitchburg and Leominster included. So you'll see those are the 2 big budgets in the top left plot. I left them in. Oh,
Can I just interrupt for a second? Dr. Burnham, can we go to slideshow mode just so it's a little tiny bit bigger?
I also have it pulled up on my screen if that, okay.
That's perfect. Thank you. Also, I think it'll be easier for other people to see afterwards.
Yeah.
I'll also add that the only reason I included Leominster and Fitchburg because they're so close to the town.
Yep.
So they are, if you're looking for staffing or whatever, they are our competition.
Yeah, and I think it's interesting to compare because sometimes we're similar even though we're very different in terms of size and all that. You know what, Dr. Burnham, some of the formatting is messed up because I think you're not in PowerPoint, maybe in like a Google Sheet thing. Is that possible? It's cut off on my screen, or it could be a me problem. I have it on my, if you want me to screen share, I can share on mine too. But anyway. So top left is just the general fund revenues across the towns. Top is Ezzy's list, the bottom is my list, and in red box is Lunenburg. It's color-coded by 5 high-level categories for revenue: tax levy, state aid, local receipts, enterprise and CPA funds, and then other revenue. And the plots on the right are the same data, just normalized to 100%. So you can see what percent of the budget is coming from what type of revenue. And across the board, not surprisingly, I think the biggest contributor to the revenue is tax levy and state aid. And this is where I noticed a weird thing. If you just focus on the red and blue bars for each column, you can kind of see that they move. In the next slide, you'll see I plotted, this is the inverse relationship that I found. If you advance one, is it moving? No.
No. Hang tight.
Okay.
I made you a co-host, so you should be able to screen share.
Okay, I have to find it on Zoom and tell me when you see it.
Yep.
Okay. All right. And I can use a laser pointer. Okay, so here I have in blue, this is just the 2 different sets of comps. The tax levy as percent of the budget. The red is the state aid as percent of the budget. And then the green is the total budget, which is using the axis on the right. So you can see, so here's the big budget of Leominster and Fitchburg. My set doesn't, the budget is a little more even. I don't have Fitchburg and Leominster, but you can see independent of the size of the budget, the higher the tax levy, the less state aid. I don't know. I know like chapter 70 is included in state aid. I think the next slides, as he has, talks about state aid a bit. I don't claim to know everything that's in state aid. It could be, so I don't know, is this the state saying, well, we're not going to give you guys any money, so the way the town makes up for it is they bump up their tax? Or is it, oh, the state saying, oh, you have enough, your tax levy is high enough, you don't need any state aid? Or is it neither?
Renee,
It's
can I
more
ask a
complicated than
question?
that.
Yeah, sure.
Is it like something that you could figure out by looking at like an exceptionally wealthy town? Like if Weston had the same spread, if you found the same pattern in like Weston and Granby, then you would know for sure, because those are sort of the two ends of the bell curve, that the state is basically saying, you guys are a wealthy town, you don't need our help. Is that right? Is that what you think it is?
I have no idea. I have no idea if this is like this should have been obvious to me. I should have known this. I just noticed a trend, and so I'm bringing it to the experts to tell me if it's meaningful.
Is that right? Is that what it is?
I don't know for certain. It depends on the distribution. Um, I have on the next slides, I have
Oh yeah, let me.
the
I forgot I
estimated
was
state
driving.
aid, so it shows what categories are included. So, for example, you have Chapter 70, charter tuitions, the Smart Growth School reimbursement, which we don't have anymore for the town, the school choice tuition. That's for the school side, and then also, you have the if there's a regional public library, that would be included. It depends on the towns that have racing as well. Veterans benefits, things like that. There's also restricted local government aid, which I can look further into, but I'm not exactly sure what categories are all lumped into that. I know there's several different criteria depending on the needs of the towns.
If you go back one slide, Renee, real quick.
Yep. Oh, wait. Um, this one?
Yes. So I did some thinking about this after we talked the other day.
Mm-hmm.
I think this is just the natural outcome of what happens in the formulations that are done by the state itself, by the state. I think this is kind of the summary effect or the net effect of everything that happens. I don't think that this is causal. I think this is the result of, in a sense, that if your town is showing more need, and that's usually based on population and based on income levels and housing prices and population density and all those other key factors, those are going to drive down potentially or up how much you're expected to bring in from local receipts or from local taxes.
Mm-hmm.
And the state just automatically fills in the rest of that on the other end. So I think it's just the natural relationship that you would expect to find. I think not seeing it inversely proportional would be an immediate red flag for any community.
Okay. So Lunenburg is here. So short of changing the formula, I don't know what we can do. And I know there's been a lot of talk about Chapter 70 and changing that formula, but okay, so it's an expected trend. And I guess it's good that we're falling on the trend because we're not being an outlier either way, I guess. Still not good that this number's down here. Is that fair?
I mean, but if you look at just kind of your local cluster there, we're at 20% receiving state aid, roughly.
Mm-hmm.
If you go back to whatever town number 6 is, which is also just below 20%, they're also bringing in a total revenue that's substantially less than us. or sorry, their
Mhm.
tax is bringing in, their tax levy percentage is a decent percentage less than us,
Yeah.
which is going to mean that their total budget is somehow higher. I don't
Yeah.
understand that.
Yeah.
So they're getting money from somewhere else, right?
Hmm.
Because they're pulling in, I guess, whatever town number 6 is, that just means that it's probably a higher population town. So they're going to be getting higher. So even though it's only 20% of their budget is coming from local taxes, that 20% is quite high.
This one's even more so. The budget's
Yep.
a lot higher.
Yep.
I can look up what these towns are, but
Yeah.
it's on another spreadsheet.
So I was just looking for what exactly is the unrestricted aid. It's the revenue sharing program the cities and towns receive essential municipal services. So I guess it's proportionate to the growth in state tax revenues.
And these are the
So
ones that were just approved by the governor. This is her
these
final
are the
budget
estimated for FY25. Yeah.
that just came out, the ones that she just signed.
I think this might have been prior.
Okay. I don't think there was a change between the Senate's final proposal for UGA and
Yeah.
what hit her desk.
Okay.
Okay. Ezzy, was there anything else on this slide you wanted to cover?
No, this was just to give everybody an idea of what the local receipts were. I mean, the cherry sheets were.
Okay.
There is one more. I don't know if it how far it's gone through, but the governor had proposed in her, was it the Municipal Empowerment Act or something like that that she's putting forward, the option to increase your local receipt taxes on, I think, tickets or something to that effect. I don't know exactly what it was, but you can increase. And Dave Passios was actually at this meeting as well with me at MMA, so he may know offhand. But it was to increase your potential income on your local receipts as a function of just tickets in town, whether they're like traffic tickets or stuff like that, or your dog license fees or something to that effect, and another revenue generating increase without having to do too much. And it was a range that you could kind of choose in between. I believe right now we're kind of maxed out.
Does that fall on the fees line? Do you know?
It would fall on, no, it just
No,
comes
it'd
in
be
as
unrestricted.
right.
Oh, okay. Okay.
Or from the in-town stuff, it would be on our local receipts. So local receipts are your traffic tickets, are dog licenses, are permits that people have to buy, like all that stuff. Like
There's
your,
like 20 some lines under local receipts. Fees
yeah,
is one. Yeah.
it's a ton, but
Yeah.
it's on that line that this increase would be. So it's borne entirely by Lunenburg residents and
Yeah.
people speeding
Yeah.
through Lunenburg from other towns.
Yeah. Okay. Chapter 90.
Yeah, I thought this was important, Chapter 90, even though it's not necessarily a on the cherry sheet, it's a reimbursement program based on road work done by our DPW department. So the apportionment I can't even say the word. The apportionment amount is allocated every year, and it essentially collects every year, and you only reimburse for what you use, but the funds stay there for the town and available. So it's just what's been apportioned every year. It's just a chart for everybody to see.
And it's
And
pretty steady.
Yeah.
And do we currently have about 2 million still, I believe, available?
I don't have the number in front of me. There was
Okay.
a large reimbursement that went through last week. So
We
Oh, okay.
haven't spent it, I think, over the past few years. I think it's been accumulating.
Well, from this, it would only take 5 years to get to
Right.
2 million.
yeah.
Right. I think so. Bill presented a plan to the select board. I think, did he present to finance committee yet,
Not
Evan?
yet.
Okay.
Next meeting, I think, or
Okay.
meeting after.
Okay. Yeah, this one I didn't know anything about, Ezzy.
Yeah, so this year was the first year this was funded. This is essentially what's called the millionaire's tax. So it's FY24 fair share. So the amendment was signed in 23 and the towns um, were funded in FY24. So this just gives everybody the idea, the formula distributed for the town. And it's essentially extension of Chapter 90. So it has to be allocated to roads and, that kind of infrastructure work. It's very focused.
So we're getting this total amount in addition to the Chapter 90 on the previous slide.
Correct. But the Chapter 90, it's a reimbursement program. This, they pay the town upfront and we have to report out as we spend down.
But it can only be used on roads, just like the Chapter 90 reimbursement. Okay.
Correct. Roads, bridges, things like that. Yeah.
And we're not seeing any of the school related millionaire's tax because that's going, I believe, that's the free lunch. No, we're seeing the free lunches, correct? Yeah. And that's about it because everything else is the free associate's degree for people over 25. Dr. Burnham, Mr. Sconbrini, is there anything else that we're going to see on the school side?
I don't think so. Dr. Burnham, if you know the answer, please hop in.
No, and I'd offer an opportunity for Dr. Gilson to jump in. No, I don't have any specific information relative to the millionaire's tax for us.
Okay.
But it is covering our school lunches, correct?
I'd have to verify.
Okay.
We are getting free school lunches. I think the issue is tracing the funding source is complicated.
Correct.
Didn't Nadine make a presentation about a potential grant for this right at the end of the year last year? So that might make it a little more complicated.
She did talk a little bit about that, and we actually found out that we fell just short, and we are not. None of our schools are eligible.
Okay, any other questions on this one? All right. Okay, this was breaking down, looking at some of the individual categories across all towns. So this first one is the total budget. So we already saw this, Fitchburg and Leominster. This now has the union of, oh no, these are the next slide, sorry, is mine. And I did the union. Lunenburg's in kind of the middle when you look at tax levy as percent of budget. A little above mid-range with the residential and open space percent of the total levy. Here's our state aid. Local receipts is on the low end as a percent of the budget. And then we're not a CPA community, so we shouldn't be surprised that when you look at other plus CPA plus enterprise funds as a percent of total, we are way down. So even though Leominster and Fitchburg have really high budgets, they're not, they're down here. They kind of blend in all over the place. So I thought that was pretty interesting. For the towns that I had in my set, not surprisingly, the way the list was generated, we're in the middle when it comes to the total budget. In the middle, these are all single tax rate towns as well. Tax levy as percent of the budget. On the upper end for the residential and open space, as a percent of the total levy. Here's state aid, local receipts. We're below the midpoint and we're dead last when it comes to the other and CPA plus enterprise. All right, so now just focusing on Lunenburg and looking at the local revenue. So these are just some of the categories. There are a lot of other categories, but Lunenburg had zeros that are part of local receipts. And this goes from 2010, these are fiscal years, 2010 to 2023, because we haven't closed out FY24 yet. just looking at this, and this is the same data normalized again to 100%, so you can see the percent contribution of each category. The biggest colors here are the royal blue, and I'll call it teal, light blue, I don't know. And this is motor vehicle excise tax, pretty consistently, you know, year to year. It's a big chunk of our local receipts. But I saw these blue bars decreasing, and this is in 2016, fiscal year 2016, you see this drop. And then it stayed down here. I have no idea. This is miscellaneous non-recurring revenue. That's the category it's in. I don't know what that is or what happened here to see that drop.
But it looks like it was not absorbed either,
It didn't go anywhere else that I could see.
right?
So
Because it's a $800,000 drop roughly. And if you look at 15 to 16,
yeah, I actually have the numbers here. So
oh, great.
no one else is happy but Evan right now, just so you know. Yeah, so I don't see like this anything here. I don't see an increase in another line. I can see the way we did licenses and permits, like here, it looks like it got bumped to this line. It should historically was in licenses and permits, and now we have a building permits line. But what is it and where did it go?
We should
Huh.
have record of that if we look at the FY16 budget. That should exist. Because we'll either see that there was a drastic decrease in the overall budget for the year by $800,000, or it was picked up somewhere else. It's not in local revenue, local receipts.
Yeah.
As
So-
Carter, is that something we can find?
Yeah, I can look back. I'm in Munis right now looking at the year-to-date budget, but I can only go back 3 years on that report, but I'll dig for the miscellaneous
Right.
numbers. Sorry.
Renee, it looks like from 2015 to today,
Uh-huh.
we're down like $650,000. And we
In
don't
that
know what
category. Yeah.
we don't know where it went or what it is.
Yep.
Okay.
This is again just looking at revenue side.
Right.
Yeah. 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 So, you know, there's tons of data in DLS, but I don't know what it all means. Oh, I should go back because Carter asked me about this on our phone call today, and I don't have a graph for it, so I'm gonna quickly go back. The other drop was in Medicaid reimbursement. What color is that? This orange. Is that right? No, there's got to be another orange. Oh, this one down here. No,
It's down.
this one.
It's the last one before the grand total.
I know, but I'm trying to get it to
Gotcha.
I don't know what color it is on this bar. I can't find it because it disappears.
Go to 2014 on the bar graph. And then at the very top. Keep going.
Yeah. I was looking, all I could see was good eyes. So 3 years, we get Medicaid reimbursement. And then poof. I mean, it's not as big a drop, but
Yeah, schools have to do a lot to claim Medicaid reimbursement. And I guess when I see nothing there, is anyone from the town side supposed to be claiming Medicaid reimbursement like the schools?
Not on the, yeah. That's normally a school
Mhm.
claim, not on the town side.
Okay,
There's always, of course, some conversation about where those reimbursements folks think should be retained. But that's a school issue, to the best of my knowledge, in my prior experiences.
And we have been
claiming.
We have
So
been.
we have seen over, like, it's pretty standard, about $100,000 in revenue gained from Medicaid as part of the efforts of the staff in the school systems.
Unless that appears in another line, like there's this departmental revenue schools. See, I don't know, these things seem to like move around a little bit from line to line.
Well, that should be relatively easy to find. We just have to see the codes that they're using when they make that deposit or turnover.
Now, Medicaid is for retirement, part of your retirement benefits, yeah?
I have a slide too on Medicaid, and it's
Okay.
for student health needs in the school system on the
Oh.
student side.
Oh,
So
boy.
it's not like
Okay.
Medicare. I mean, that may be like, you know, you can claim it, I think, on the senior side, but it's for
Okay.
significant health needs.
Okay. All right, so there's two piece revenue streams that I can't explain that have gone down. Then investment income. So this is, again, FY23 is the latest we have across all the towns. Fitchburg and Leominster are leading the pack again. Lunenburg's down here. Looking at Lunenburg from 2003 up until 2023, we did really well in 2023, big jump, as did everybody else. This last blue bar is FY23. Everybody did really well in FY23. We didn't do, and most people had, you know, the 4 years leading up to 23 had decreases or really low, including Lunenburg. But I think we weren't as bad as some other towns. Like I'm looking at Groton. They were doing pretty bad, but they had a bigger jump in FY23 than we did. And I don't know how the investment income works. Oh, that should be FY03. If we didn't make as much in FY23 because we didn't have as much invested, or what we had invested wasn't invested well.
So this is one of the biggest points that the finance committee is pushing for. We have noticed, we've looked at these accounts, and there's millions of dollars sitting in these accounts, and they're spread out over like 40 or 50 different accounts. So we've wanted to make it a pretty big, important part of this group to take a look at those and see if we can consolidate them, to see if we can shop out better returns. Some of them, they even have the estimated return rates, and some of them are like 0.01%. It's disgusting. Where you,
What is that?
off the top of my head, I don't know. I requested it from the treasurer. She's just finishing up closing out FY24, so I should get the report again for this year. We have it for last year. But unless there's statute that's limiting where you can invest funds, we're missing out on hundreds of thousands, if not millions of dollars of interest that we could be, or investment income that we could be using. So I think that's probably one of our best opportunities for basically free revenue generation. It doesn't cost anybody anything.
Right. Right. I mean, I look at Groton and they're about double what we were in FY23. And they started, it looks like, from a similar place, but the prior year.
Evan? When so like one of the things that we do at my work is that we oftentimes buy structured settlements for clients that get large payouts. And up until like 18 months ago, the returns were pretty bad. Is your guess that the investments were made when returns were bad, and now that returns are getting better, we should just switch over, or were they just bad investments to begin with?
I can't say for sure. I can tell you, I mean, if you want, I have the document up right here. I can show you how bad it is, at least for FY23. If you'd like me to show it real quick.
Yeah, let's do it.
Okay.
Because yeah, we should have our money working for us, right?
That's what we keep saying. It's this one. That looks good. Okay. So this was for the end of FY23. All that I'm really looking at is our interest rates. And like I said,
my God.
Yeah.
they're pretty bad. I mean, we have 1.3 million sitting at a 0.15% interest rate. We have millions of dollars.
There's a couple at 5.3.
Yeah, there are, but
Why don't we have more in those?
Because there's $84.47 in there too, and $19,000. But here's our 0.01%. There might as well be zeros. We do have some 3% ones, so we've got almost $2 million at 3%. But there's no reason, in our opinion, why we can't consolidate some of these into better accounts, or at least.
And why do we have so many of them?
That was our other question.
Yeah.
We haven't had an answer for that one yet.
Okay.
So, but yeah, that was our total.
Do you know, are there like maintenance fees or anything associated with the different accounts that we could be not just not making as much, but actually paying out more than we should?
These are all questions that would be good for, I would assume, Ezzy, would that be the treasurer? Probably.
Yes,
or does that fall on you?
No, well, ultimately it falls on me, but there would be questions for the treasurer.
Okay.
I mean, ultimately we can always ask our Bartholomew to come in to do a review, maybe talk to the finance committee and the task force. But I was looking at these when I first came aboard and noticed the same thing.
Do things like this show up in our audit? Because we just had an audit.
Well, the audit would show if there's any mishandling of funds, or
just mishandling, but not like, hey, you guys are missing an opportunity.
No, they don't look at our portfolio and say you should invest. That's not what their role is. But we can definitely we can invite the treasurer into maybe the next task force meeting and ask her to just kind of speak about the investment strategy for the town.
She should hopefully have a better idea for the FY24 number as well, to see how we're looking at for our $27 million we have sitting in the bank.
Yeah.
Wow.
I want to say the treasurer from the district, which I was formerly a part of, actually made the decision to get a better rate of return on our investments. He switched banks, and we had a much better result. So it might be something to look at.
Yeah, to me, that would be how Groton did it. They either have a much bigger number here, so they had the same percentage increase, so it looks bigger, the differential, or these numbers look a lot better.
Is it true, Ezekiel? So like when we go out to buy the structured annuities for people, the more money we have, the more bidders there are, which means that we get a better rate for our clients. Is that true with the municipal investments as well?
It should be, yes.
So if we consolidated everything into one $27 million account, we should have people willing to give us a much better interest rate.
Yes. But the trust fund accounts and certain fund accounts need to be separated into different accounts. That's per Mass General Law. Like the OPEB and things like that, they need to be separated out. But the majority probably can be consolidated. There may be some old accounts as well that have no activity, like that $84 one.
What would you guess the percentage, or what would you guess the number we could generate if we put everything allowable by statute into one account? Could we get to like 20 million bucks?
I can't guess. I wouldn't be able to.
Yeah, that was one of our questions as well. Is how much of this can we consolidate and put into a single chunk? Like, Is it just our liquid investments that we have? Can we do all of those? Because that would be a nice $18 million. That's the chunk of it. And it's split
I mean,
up
if you
between
get a
what,
3%
1, 2.
return, we're talking an amount close to or equal to the override.
Yep.
It's crazy. That's just unbelievable.
Yeah. Yeah. You could fund capital projects with this. You could fund all sorts of stuff with just the interest alone.
Mm-hmm. Yeah, I'd be really interested to know which funds could be consolidated. Because I know like there's a stabilization fund. I know those are like special, right? There's a healthcare stabilization fund I saw and a couple others.
Well, I mean, one of the most recent ones is the ARPA one, and we
Oh,
pulled 3.5% on that one. So even that one's not great. But with Unibank, we have a number of accounts with Unibank.
so many different banks. Carter, is this tip, have you seen this? Like, is this unusual or have you seen this before? I can't see him. Is he here? Oh, if you're speaking, we can't hear you.
His camera's off. He might be away.
Yeah. Okay. That to me looks like a quick win.
Yes.
I'll send this around.
All right. So I don't think I had much left. Let's see. Go back. Slideshow. And advance. Oh, okay. Investment income. Yes, fees. So there's there's a line in the local receipts, just fees. Looking from FY 2003 to FY 23, the revenue from these fees has gone up in Lunenburg, especially the last few years. The last 5, that's a 46% increase. I don't know exactly what's included in those fees. When I looked at the percent increase for the same 5-year period across all the towns, all of these guys down here, these are decreases. They've actually gone down over the course of the last 5 years. And there's a couple of towns that had no fees. Lunenburg is the 4th highest increase. I think this is Winchendon. I don't know what happened there. Here's Winchendon. I don't know what happened. So these are, each bar is a year, so the 5 years across the towns. Across the 5 years, they're pretty stable. Sometimes they go down. Lunenburg has had a steady increase that you saw in the line plot. I don't know what people in Spencer are doing. That's a lot of money. I mean, here's Leominster and where's Fitchburg? Here's Fitchburg. So they are higher, but we have had, I would say, more of a steady increase in our fee revenue than other towns, although the amount we are collecting in that line is not one of the leaders.
Renee, just so you know, Spencer had a dramatic increase in their pay-as-you-throw trash program, more than doubling the fees on it. And Winchendon did a similar review of all of its fees and had some pretty big increases all at once.
So that's interesting because Winchendon had a single year spike, but Spencer has been up there 5 years running.
Yep.
And we are looking at a new trash contract. I hope we don't end up like this. Groton saw a big drop in contrast. So again, I don't know everything that goes into that line. I guess if you look at this, you say, oh, we could still increase our fees and you know, but we've been increasing them. And the last thing was new growth. So the blue line is total new growth over the years in Lunenburg. Very erratic. And I do have the FY24 numbers. So that we saw a big spike. And I remember during budget season, Heather said, we got an extra, I forget how many 100,000 in new growth. So it really overshot our estimates, and we were allowed to, that enabled us to put more money into the budget and help a little bit. But when you look at the red line, which is the residential new growth, that as a percentage of the total. So here's the percent on the right-hand side. Just looking, I mean, it's noisy, but over the past 20 years, it's actually gone down. So the residential new growth has gone down. Looking at all the towns for total new growth, this is just the last 5-year period. Lunenburg's kind of in the middle. These are the towns in the same order. I didn't resort them. And this is the residential growth as a percent of this total. So these towns on the right side had the highest new growth, but that new growth, here's the percent that came from residential. It's coming from somewhere else. Because these towns are now lower bars. Lunenburg is still in the middle. So I don't know the source of this new growth. It's of course Fitchburg, Leominster, Charlton, and Uxbridge. I don't know those towns well enough to know like what happened in Uxbridge especially. And then these are the same graphs, and then I just sorted each one independently, and just so you can see where Lunenburg ranks. It falls down towards the lower end when you look at the contribution of the residential new growth to the total.
Renee, if you had to guess, anybody from the town, would it be because there's not a lot of property development in Lunenburg or something else?
I just realized I'm blocking some bars. I mean, I think last year's new growth, a lot of it came from the big warehouse, right? They got the certificate, increased the occupancy. So it was far the building was not 100% done, but farther along, so it was assessed at a higher value. I think that's what happened last year. Is that right? But what else goes into new growth besides, new properties, new commercial, new residential property? Is there anything else that hits that?
Basically any building permit beyond a simple repair. Even a deck goes into it.
So even if you knock down a house and build a new one in its place?
That's
Because there
correct.
has been a lot of that.
That's correct. We'd have to get some building permit numbers from the commissioner to get a better sense of that, and we can do that.
But this is 50% of the total growth came from, and this is again, I think over the last 5 years came from residential new growth. So there is some commercial, like, is there commercial industrial? Is there another category? Again, that's another revenue stream, but how do you say, hey, we're gonna do more? I don't know that we have much control over that. Certainly not like we do over the investments.
So Uxbridge put out in 2023 a giant document that is designed to bring it's targeted towards business development. And it's 351 pages long. It's the Main Street district, and they have loans where the businesses can apply for developing and stuff. So it looks like they went heavy into commercial. So that would be my guess as to where all their new growth has come from.
I don't know that we necessarily want that, but
no, but it at least answers why theirs is so low for residential. They're down
Dave,
south of Worcester, I think.
Tony,
has a
Dave had his
question.
hands up.
I'm gonna let Dave talk, even though it's not public comment.
Okay.
He gets a special permission. Mr. Passios?
Yeah, I greatly appreciate being able to speak for a second. One of the things, and please somebody correct me if I'm wrong, but I think better accounting and inventory of business equipment and personal property also factors into new growth. And if the assessing departments in these towns did a special project or a complete revaluation, like we're required to do on a periodic basis, that is where I believe where some of that growth does come from, and that would be outside of the residential.
So, Mr. Passios, if I'm understanding you correctly, you're saying that like better enforcement of existing assessment rules increased revenue.
Yeah, because machinery and equipment is taxable, but it's not considered residential tax. It's I think it's identified as personal property tax. I may have the wrong words, but you know, there is a tax on equipment.
Right.
So
Thank you, Mr. Passios.
I don't know that this is more information. I don't know that we can do anything to change it, but
Renee,
yeah.
one last question. Do you think it's, and this is something Evan brought up at our first meeting, do you think it's fair for us to think about changing the residential tax assessment? I mean, like, I feel like you know better than I do because you're on select board, but those people have gotten hit pretty hard here recently, and I'm not sure there would be an appetite for another round of assessments.
Well, we just had it, right? We had our 5-year reevaluation.
Yeah.
Yeah, I mean mine went up 40%. Yay. Um so but I mean no, we just finished a reevaluation. I don't think we're gonna be
Yeah.
not saying this is to reassess, but an override would obviously hit your tax bill.
Yeah.
Again.
So I just have a question. Has there been any thought in the past about splitting the tax rate?
It comes up every year, and we don't have enough. The magic number I've heard, if I remember right, I think it's 20% commercial and industrial before it's worth splitting the tax rate. Because, and I was surprised. I think Westford was 14% commercial, which shocked me. I thought they were higher.
So I've heard that too, Renee, but I've yet to hear where that source comes from. It's sort of just this magical number that floats around the town that everybody knows the rate is 20%, otherwise it's useless and you drive out competition. But where I have yet to see a study or anything that says this is why.
So all these towns here that you're looking at, well, I stopped sharing. They're all single tax rate. I mean, I think that is worth, God, this is so far out of my wheelhouse.
Well, you'll have the classification hearing coming up in early November. And what happens is when you're at 90%, 10%, as you are, the amount you have to spike the commercial industrial rate to get any real benefit for your residential property owners is dramatic. And I'll see if Linda can get a preview of that. And so what happens is, you know, you drop your homeowner's rate a little bit, but you really do dramatically increase because you just don't have enough to spread it around on. So I'll talk with Linda tomorrow to see where she is and starting to put that together. We don't have all the values certified just yet, but I think when you see a couple of examples, you'll really get a sense of the impact of trying to develop a split rate when you don't have 75 to 80% as a bare minimum of commercial industrial.
Yeah, I guess that makes, I can understand if you don't have enough commercial industrial and you're trying to relieve the homeowners much bigger pool, you have to spread that out against a smaller pool and they take a much bigger hit.
They take a real hit.
Yeah. But I'll tell you that the classification hearing, I mean, I've been to one. It's a rubber stamp. They come in there, single tax rate because we don't have 20% commercial industrial. Like Evan said, I mean, maybe it's valid. I don't know, but that number, I've heard it, it's stuck in my brain. I don't know what's behind it.
We'll
Is that
go-
the real threshold? I don't know.
We'll look at last year's presentation and see what we can do to maybe make it a bit more informative for you.
I mean, explain it. We understand it, but how is there a magical formula to decide what the threshold is to make it worthwhile to have a split tax rate?
Not that I've ever read. It's just a matter of experience. When you start putting these numbers up on the grid, you got to be in that 75% plus or minus range. And even Worcester's been trying to work their way out of it.
Oh, really? Wow.
They haven't succeeded, but they keep trying.
Okay. So that's all I got. Maybe that miscellaneous, non-recurring, Medicaid, and fees are those like the top three takeaways?
Mm-hmm. Aside from investment, that is unbelievable.
Oh, then the investment. Yeah. I don't mean fees. I meant investment. Yeah. That's a big one.
That one may, I don't know who we can reach out to for that one, because I assume that there is so much existing requirements that you'd have to have some type of a specialist that would know this money has to be kept in an account that's specifically this, or it has to be separate from this account. And maybe we are already doing it correctly. I don't know. I've yet to come across someone that knows sort of all the ins and outs of where the money can and should be invested.
But that
I'm
seems like
sure
a
we could
crazy
find
number.
that. Yeah, I'm sure we could find somebody who's a municipal accountant specialist.
Do we still have Karen's number?
Even she wasn't sure when we
Really?
first did this. Yeah.
Wow.
You know, just off the cuff, Babson has an entrepreneurial program, and they have graduate students that might be able to look at these sorts of things. And so I'm just throwing it out in case that's worthwhile to have someone look at it and try to study it and provide us with some information.
Yeah, I'm wondering, do we have to hire a consultant for this?
Interns are free.
Interns are free, I know, but is that going to be enough?
The one thing that I would say, Renee, is when I have cases that involve money, I go get like a forensic accountant, somebody who's both an accountant and a lawyer, and they give pretty precise information. The one problem with those people, as you can imagine, is that they take their fee as a lawyer and they take their fee as an accountant and they add them together. But
well, we don't want the lawyer part, Tony.
No, I know, but if they would be able to tell us whether there's like a law that applies to municipalities about segregating investments, and then they would be able to also tell us what the best way to invest would be. It's just they're really expensive. I can find one of those people if we want to talk about it, but they're expensive.
Do we submit an ARPA request to pay for it?
I don't know.
I'm only 10% joking.
Oh. Why not?
I mean, I feel like that's an easy way to you can argue that to recover tenfold potentially.
Yes, I mean that could be
grand.
money well spent.
I will reach out to my expert friend who's on another board that I'm on and see if he has any names, and I'll bring him back.
Carter, do you know the best type of person, or know anyone, or how will we go about looking into this?
It's a challenge. I mean, the first thing you have to do is, no disrespect to any prior accountants, but often, they get a new grant or they get a new fund. They think the easiest way to track it is, well, we'll just have a bank account. You don't need to do that. You can't commingle many of these things, not all of them, but many of them, which then bulks them up. And then you can put them out for bid. And again, especially when you only have one bank in town or a limited number within a reasonable drive, treasurers really aren't that nuts about changing the banks and such. So we can talk with the Department of Revenue, and I'm sure that Ezekiel has some resources and whatever Tony's able to bring to the table. But there are quite a few restrictions as to where you can invest. Has to be fully collateralized, has to be insured. There are quite a few safety rules, if you will, which can tend to depress the return you can get.
I think what I worry about is if we combine some accounts into some type of an account and then learn that we can't use the money for what we need to use the money for because of some mass general law or something. Like I'm thinking, Evan, the parks fund that isn't the right type. Do you remember that discussion at your last
Talking about the revolving?
the fund that they wanted to use for the extra hours, pay for the extra hours, it was 53D instead of something 53 and a half.
53E and a half. Yeah.
I don't want to get, I mean, it's hasn't caught up to them all these years. No one knew, no one realized, but I don't want to get in a situation where we consolidate things and then learn like, oops, we shouldn't have combined those. We can't get to them. We can't use them for what we thought we could.
Well, you do have to do your research ahead of time, not
Yeah.
trip across it afterwards. I think Bartholomew handles all your trust funds, don't they, Ezzy?
Yes, correct.
And they're able to track them without necessarily having a single separate account for every single principal and interest.
I could reach out to them, have them do a review. I know we just we're into the new year, so it's probably a good time. I don't know if the treasurer has already done that, but I will circle back.
Why don't we take it up with the finance team meeting this week, or Ezzy, I'm sorry.
Yep.
Yeah, it seems like over the years, it's just time for a cleanup.
Renee, that was a really amazing presentation. You did a lot of math.
Math is easy, Tony.
Oh, no.
And Ezzy did a lot. Ezzy sent me data. Yeah.
You guys did some
anything.
real heavy duty math. I'm impressed.
It's DLS. There's a lot of data in there. There's a lot of ways to slice it up. There could be other things that I missed. So yeah.
I mean, if we can get those two revenue streams back online, that's $700,000. And if we can get the investments squared away where they're getting a reasonable return, like I would not be surprised if we could find, $1 million between those two sources, depending on what they are. I mean, if the non-renewing miscellaneous fund thing is just like a random thing, then that depends. But if it's something, and it looks like it based on your data, that was like occurring at a pretty consistent clip for more than a decade, and then it just vanished.
Yeah. It's really weird.
I mean, it's not like Lunenburg has like an oil well that went dry or something like that. I mean, that would be an easy explanation for a revenue pattern that looks like that. But I have no idea what it could be. I can't even think of it.
And the only way it could be more nondescript than miscellaneous non-recurring is if it was other.
Yeah,
I
yeah,
mean,
yeah. Right, right, right. Yeah. But I mean, that's like a potential, like those two things, I think we could, if we figure them out, it could be $1 million. That would be
I,
helpful.
The
I'm
only
more
thing I can
optimistic
think
on
of,
investment.
miscellaneous non-recurring could be maybe a settlement that the town received. Could be something along those lines. It could be something large that's outlying in 2016. Uh,
I mean, well before COVID, so it couldn't have been any of those, you know, the funny money stuff.
yeah, that's the only thing I can think of off the top of my head.
There was some sort of revenue stream that just dried up.
All right. Is there anything else we want to present from the town side?
Not for me.
Ezzy, anything from you?
The only thing I had sent out just updated information regarding the CPA.
Yeah,
Mhm.
And
I
I
saw
was
that.
reading Heather's email for 2020, and I don't know if that ever went to town vote, if that passed or not. It looks like there was a presentation to the select board. I don't know, Renee, if you would know.
No, predates me.
It seems like and it's an additional tax for the residents, but it's an additional revenue stream with reimbursement from the state as well. So I don't know if you want to go that route, but just wanted to throw that out there.
Do you have any estimates on how much it would generate? Like, if the tax is worth it? I mean, if we're going to tax people and it basically is a zero sum, then we should probably skip it. But if there's some way to make it work, like where, you get more than what you put in, that like not matching funds, but better than matching funds. Do you know how the formulas work out?
I do not, but I can get it for the
Okay.
next meeting.
I don't know if I looked at the links that you sent and it listed town by town. I thought it was, you know, the contribution and what they got back, and I thought it was less than a zero gain. I thought it was a money like more tax went into it than they got back. Did I
So
read that right?
the way it works is if it's adopted, it's up to a 3% surcharge of the taxes. So if you're $10,000 tax, you would think it's 300, but not necessarily, because you can exempt a certain amount right off the top. So in many communities, that, as I recall, that's about $100,000. So if you've got a $500,000 house, for purposes of the surtax, you're taxed on 400,000. And let's say, just for simplicity, that decreased your $10,000 tax bill to 8,000, just to keep that 1/5 there. So your would be $240. That goes into a separate account. There's a state reimbursement. Once upon a time, when there were very few straws in the soda, if you will, folks were getting almost 100% reimbursement. That did drop over time. The state raised the registry fees a bit to bump that up. So it's running, year to year, it changes a little bit, but you can think in terms of getting back about 65 plus or minus percent. So what we'd have to do, and then it's restricted for open space, recreation, affordable housing. So only to the extent that you are supplanting projects you might have undertaken with your own capital dollars, whether it's, I'll get the name of the park wrong, starts with an M. So thank you. So you can think of it as a capital revenue. You can think of it as support for local nonprofits, Audubon Society. You can think of it as support for affordable housing projects. But in terms of operating revenue, no, it is not available for that purpose at all.
All right, sounds good. Ezekiel, is there anything else on the town side?
Nope, I don't have anything else.
All right. Dr. Burnham, Dr. Gilson, do you want to present the town's information or the school's information?
Sure thing. Dr. Gilson, you can screen share, I believe.
Okay. Perfect. Okay. What the school side did was we examined all of the revenue streams that are coming into the school district. And I think one of the things that we found for the most part is by actually looking at revenue streams from Chapter 70, circuit breaker, entitlement grants, competitive grants, Medicaid reimbursement, school choice tuition, facility rentals, parking lot fees, and athletics, we were able to, for the most part, these avenues have stable trends. And with the exception of, there are two variables, the competitive grant strand and also the school choice tuition grant strand. And I will go through the data to kind of give you a perspective on those. For Chapter 70, looking as far, we've gone back further than FY19, but this gives you a perspective. This is where it pretty much falls. Each year, it has been steadily increasing. Chapter 70 funding, every school district in Massachusetts gets the state aid. The purpose of Chapter 70 is to make sure that every school district is providing an adequate education to all students. And it's a basic formula that takes into account the wealth of each community and the needs of its students. So our fortunate side is ours is increasing. Circuit breaker is a fund amount that assists with the cost of covering high need special education students. Beginning with FY22, the total amounts listed in FY22, FY23, and FY24 take this total amount and requires a set aside for instruction and transportation. So our Director of Student Services applies this funding every year. And each year we've received at least 70% or more of the previous fiscal year allocations. Our funding stream management actually resides with different responsibilities amongst the Director of Teaching and Learning, the Director of Student Services, the Director of Finance and Administration, and the Superintendent of Schools. The Director of Teaching and Learning and the Director of Student Services write and they develop the narratives that align with the district strategy for continuous improvement. They propose a budget. We collaborate with DESE to finalize grant approval. I check all the budgets as part of that. The town provides the account detail and that aligns with the DESE fund codes. And we monitor every aspect of the grant budget spending. And as districts, we must report on final outcomes. And Dr. Burnham is the chief executive for all of the grant approvals in the district. State and federal entitlement grants. These are monies that even though the state allocates them or puts them aside for every school district in Massachusetts based on your need, there is a significant amount of paper monitoring required for all of these grants. You can track them across, and it seems like, if we look at FY19, which is like pre-COVID kind of spending, and where we are now, we are allocated approximately close to $700,000 in the entitlement grant areas. If we go into competitive grants, I mentioned earlier that the competitive grants were the most variable. Each year, the state puts out notices of competitive grants that are available to school districts. You have to apply. There are priority areas, and there's never any guarantee that Lunenburg will be awarded any competitive grant. However, one of the things I think that should be noticed is in FY19, there's no traceable grant that we received from a competitive journey. And then beginning like FY20, we started getting some money. And then I think that with the district strategy for continuous improvement, there's a continuous effort and orchestration among the members of the team to make sure that this money amount is competitively sought after and being awarded to the district to improve programs and performance of students. School choice is another one that is variable in terms of looking at our tuitions. One of the things that it depends on is what the school committee decides is appropriate based on our enrollment in the district for the amount of seats that we might have available. The school district can say no, and that means that no students will be accepted into Lunenburg schools from other districts. They have said yes for grades 9 and 11, and in the tuition from FY23 was 16,976, and the tuition in FY24 is 94,912. So those are monies like the competitive grant. School choice is variable, and it depends on the decision making and the capacity of the district to write grants for competitive grants.
Dr. Gilson, can I pause there real quick just so that everybody in the task force is aware? The school committee made a decision to not expand the number of school choice slots for fear that the budget crisis would make it more difficult on students and teachers that are already in the school. So we looked at the marginal increase in revenue, and then the idea that if we opened it up too much, we would push the number of students per class beyond a limit that the teachers and administrators felt was comfortable. So it wasn't worth the extra revenue to, for example, go above 25 students in a first grade class. That would just be a headache, and the amount of money we would get would not be worth the headache. And so at least for next year, we're not expanding school choice. And I don't know what we'll do after that, but that was one of the things that was our thinking behind why we weren't going to rely on an increase in school choice revenue in projecting the budget for next year.
Thanks, Tony. Okay, so Medicaid reimbursement. This is a little bit of a expansion I know Renee started to talk about Medicaid. This is the school-based Medicaid program, and it offers our town federal dollars to offset the cost for certain Medicaid covered direct services. Like this could include applied behavioral analysis for students who have ASD, audiology, dental assessment screenings, medical nutritional services, and so on. The amount, and again, this is the efforts of people working in the special education office, and they have brought in each year, they've been conscientious about applying. The funding is paid out quarterly, and these have been the amounts that we've basically leveraged around, well, the range has been like from 108,000 to the highest, which has been 137,000. So that gives you a base idea of the ranges across the span of several years.
Now,
Dr. Gilson?
Yeah.
That doesn't get reported to the town's Medicaid? What, this is a separate line in the revenue?
This is information that I don't know enough to answer that right now in terms of where it gets reported. All I know is that we are applying for it, and the money is somehow coming into the school district to offset costs.
It actually goes directly to the town. Again, I don't know where it's being recorded.
Yeah. Okay.
On your town ledgers either, but we get notification, to alert folks to be on the lookout that that the money is coming.
So that might be an area to investigate further on both sides.
Mhm.
Okay.
So can I just make a comment, Dr. Gelson?
Yep.
This slide and the previous slide about the circuit breaker, they have to do with special education. And if you sat through any of the budget meetings last year, you're aware of that. But if you're not, the circuit breaker funding is a following funding source. So it's for, like, we're going to get money for 2024 and 2025. And it is not, and it doesn't cover all of the out of district placement costs. It only covers a certain percentage. One of the things that Lunenburg has done, and if you compare it to like Westford and the other towns that did budget task forces, you'll notice that we have a significantly lower number and a significantly smaller percentage of out of district placements. And that is because Juliana Hanscom makes great efforts to keep our kids in our community. And that is not only good for the kids, it's good for the typical peer students. It is also a cost savings to the town. And so both of these revenue sources, the circuit breaker and the Medicaid, are out of the special education office. And I think that if you compared our data to other towns, we are doing exceptionally well. And the last thing I want to comment in, this is one of those placements where we were talking about this when we were talking with Heather about obligatory funding. There are so many rules and regulations regarding special education that a lot of this stuff is things that we can't control. And so, for example, the cost of out of district placements is set by the state. And last year they had a huge increase in what they were allowed to charge. So comparing us to other towns in terms of costs doesn't make a lot of sense, because all those costs are determined, not all, but the majority of them are determined by sources other than us. Though the one thing that we can compare is the number of out of district placements. I think that's the easiest thing to compare. As a civilian in the education world, that was the easiest thing for me to understand. And I would bet $1 to a donut that no one does a better job at keeping their kids in their community than we do.
Yes, you're absolutely right. Juliana does a great job at that. So lastly, these are just trend lines, because the parking permits is so low, it's almost non-impactful, but we're really after every supporting dollar that we can return back to the education budget. And again, fall, winter, spring athletics bring in these amounts right here historically, and middle school athletics brings in about $21,000, and facilities rental, we're bringing in about $20,000 a year. So that kind of presents a perspective on where the amounts are falling, and what the school department is doing to bring in streams of funding to support the budget.
Dr. Berman, Dr. Gilson, correct me if I'm wrong, but the funds for athletics are not paying for the cost of all of the athletics. What we spend on athletics exceeds the fees we're charging.
There is a portion of our local budget that does fund athletics, but as you can see here, a lot of the cost of these programs is covered by the fees that come in. So in other words, this is not like a money-making endeavor for us. All this money that comes in goes right back out. Same is true for the facilities rental. There are costs that we incur to either maintain the exterior playing fields or providing custodial coverage to open our buildings when it's the building that's being rented, so on and so forth. So the rental of the facility is not a revenue, not truly a revenue generating endeavor. It much more so helps to cover cost. And I would say it's been a little bit since we've done a really deep analysis to figure out whether or not we are truly breaking even on covering the cost. So it is time for us to dive in and do an updated analysis on that.
But on the athletics, Dr. Burnham, remembering the presentation we got about the costs for programs, we're losing money every semester. So there
yeah, I
is
mean the
money
challenge, right? The challenge for us is that you know, the last few years we really haven't increased budget lines for the athletics in our local budget. And we have not increased our athletic fees in the entire time that I've been in the district. So for the last 6 years, there's been no increase. However, the cost of transportation has increased every single year. The cost of replacement uniforms has gone up. The cost of the officials for all of our games has gone up. The costs have gone up, and it really and truly is time for us to do a deeper analysis, because I do feel that we are at that place where we need to make some decisions about whether or not we're going to increase fees after holding them steady for so many years to assist in covering costs, or we are definitely going to have to increase what we are budgeting in the local budget. And if there is not additional revenue to increase a budget, then that means we will have to make difficult choices about other areas of the budget that we would have to cut if we were going to have to increase budget lines for athletics.
The other thing I want the other members of the budget task force to be aware of is that the school committee has a policy that athletic fees will be tied to people getting full, reduced, or free lunches. So if you have a reduced lunch, if you're a reduced lunch student, you will pay a reduced fee. The other thing is there's also a discount for multiple siblings. And so not everybody is paying the full amount. And I just going to put this out there. I do not think there is any appetite whatsoever on the school committee for making poor kids pay more money to participate in sports.
Is this reflective of all the funds collected that I guess families are required to spend to have their kids play in high school sports or middle school sports? Or do they usually have any other, I mean, other than like obviously buying the kid cleats or whatnot, but other expenses beyond sort of these general expenses and just usual expenses that you might have?
From a parent lens?
Correct.
Yeah.
The boosters.
Right. Personal equipment purchases would be a cost for families to consider. There are booster events, fundraisers. So, you know, there are parents who sort of perceive that that's additional money that they have to put out for a student that participates in athletics. The booster monies, however, those fundraisers do not come directly to us to support the program. All of those monies are raised by the booster groups. And just for clarification, we do not have any oversight authority over the boosters. They are independent organizations. They fundraise, they control the money and allocate it as they see fit, which typically is to fund things like the banquet, the end of season banquet. There might be some awards that they fund, scholarships for seniors each year typically will come from booster organizations. And typically the boosters will also, you know, purchase some type of apparel typically for seniors, whether that's the senior sweatshirt or a senior tracksuit or, you know, something like that. But generally speaking, the booster groups are not providing funds for us to repair athletic equipment, purchase the required new footballs, new lacrosse balls, so on and so forth. That's what you see here on the screen. These fees here are applied to offset costs related to running the program.
Okay, and it's just what is collected from parents effectively paying, or students, I guess, for parking permits and whatnot. It's not like donations that may be given or anything like that as well. Okay.
No. Typically, if there are donations, that comes in and is presented to the school committee, and the school committee would accept a donation. Typically, when those types of things happen, they tend to earmark them for what they would like to see those dollars used for. But like I said, generally speaking, the only booster group that contributes anything toward the costs for a program is our hockey boosters. They help to cover ice time. Other than that, the boosters, generally speaking, the monies that they raise and spend for our student athletes are more of the extras, not the cost of running a program.
Okay.
Dr. Burnham, just an addendum to what you said for Evan's edification. The hockey team in Lunenburg is, I believe, unique in that it is a shared team with another town. It is a regional hockey team.
We are a co-op team. Yes.
Yeah, they're the only sport that does that.
Well, we have had other co-op teams in the past. Generally, we do a co-op team with another community if they have a team that is small in number and they're coming up a little bit short in being able to field a team, and we have a handful of students that would like to participate in that sport, and we can't even come close to, fielding a team. We will seek out other districts and see if other districts that are part of our league, to see if there's any interest in allowing us to co-op with them. So we have had some over the last handful of years in other sports.
Okay, thank you.
I just wanted to I just ran a report. So the departmental revenue for the schools includes the Medicaid reimbursement. It includes student parking fees and the preschool tuition.
Okay. Thank you.
Thanks.
One question I have, and this is to anybody: where does the revenue from the cell tower rental go?
That goes directly to the town.
Okay, and I know it's used to pay for the turf field installment payments, but that is technically district property that generates revenue, but it goes directly to the town. So we don't count it, correct?
For us, as a source of revenue, we don't, because again, it was an agreement that was made, and that revenue was set up to go directly to the town. It doesn't even filter through us. As an example, parking permits, we gather those fees together, right? The tuition for pre-K, we gather those fees together. The revenue that comes from the cell tower, we don't gather that in any way. That's a payment that goes directly to the town.
Dr. Gilson and Dr. Burnham, I just want to make sure I'm correct. There are really three kinds of revenue sources. There's ones that we generate and we keep. There are ones that we generate and remit to the town. And then there are ones that the district or district property generates that never get touched by the district but go directly to the town, correct?
All right, so I just need to think about that for a second to make sure that we've got that all right. There are sources of revenue that we generate and we keep. That is true. There are sources of revenue that we generate in terms of there's a fee and we collect the fee, and that goes into a town account. And then there are some sources of revenue that are generated because of our property, as an example, the cell tower, where that goes directly to the town, and we're not involved in that in any way, other than the source of the funding is connected to school grounds.
That's why we did
I
not
think we've
see,
covered everything.
yeah, that's why we did not see the cell tower rental fee on school district revenue, because we don't have anything to do with it. But that
Correct.
is a source of revenue out there. And like, if there was anything else that we could do like that, that might be another way to generate money. Like, if we could put a cell phone tower on every light post at the football stadium, or if we could, you know, rent out some big giant flat space on a roof for, I don't know, whatever. But those are things that we should be thinking of as potential revenue sources. I even looked at whether or not we could have them build like a charging station in one of our parking lots. And unfortunately, that doesn't generate any revenue. But just those kind of things we should be aware of, because it's like the cell phone tower really is just free money. I mean, we don't have to do anything. We just have to have a big stick in the sky, and that's it.
And anyone know how much revenue you generate from that? And then where would that appear on the town's, which line does that appear on the town side?
I think it generates slightly more than 30,000 a year. I don't know the exact number. But I do believe that that's deposited into the turf revolving account.
Oh, it goes directly into an account and doesn't show up on what I was looking at.
I think so, but I don't know. I don't know for certain.
Because aren't there cell thingies on town hall too?
Mm-hmm.
So you get about 30,000 a piece? I don't know where the ones on town hall would go. What fund or what line?
Yeah, I'm looking for it now.
I would say that if there was any opportunity for more cell phone towers to go on municipal property, as
Mhm.
opposed to some beautiful piece of woodland, you know, pristine woodland area in the town, that would be something we should strongly consider,
Mhm.
because not only does it improve reception for people, Jeff,
Yeah,
but it's like free money.
I know. There's certainly enough dead zones still in town.
Yes, yes.
Well, we had been in conversation with someone from AT&T that was interested. So there has been some back and forth with AT&T.
Okay. What about solar panels?
So that is something that is quite a puzzle. There are different companies that give us metering credits based on the different panels. The companies have changed names over time. So it's been a real challenge to track and keep track of which companies connected to which of the solar panels and what is the metering credit that we're getting. Yet we pay a fee to these companies as well. So we are really in earnest trying to untangle this situation to be sure that we are, in fact,
Making money?
making some sort of
Right.
benefit here.
Yeah.
Because it's not entirely clear that we are. So, but it has been quite an ordeal to try to get to the bottom of it.
Where we are right now in terms of getting to the bottom of it, I think what we figured out is for every dollar we spend, we get a 15-cent credit for certain ones, and for every 35 cents we spend, or for every dollar we spend for other parts of our property that have solar, we get 35 cents credit. So we are still trying to untangle it, but it's all part of the same agreement. The rep tells us it was part of a community agreement that was made years ago, and I think we're going to have to continue digging because it's the source. The community agreement was the source of this, and I believe the town shares the same agreement.
Renee and Evan, one thing I was wondering when we were talking about this, because we had a meeting on Saturday. I was very grateful they were willing to meet with me on Saturday, but if we can buy our way out of these leases of these panels and then have the revenue stay with us, it might be a thing that doesn't make money the first year, but like if it's all town stuff, and we don't have to, and servicing them isn't that difficult. And it might be a way over time to generate money so that it, it'll cost us something up front, but then it'll pay more later. I don't know. I just wanted to put that out there because the differing rates in the differing companies is like really daunting. And it's almost like they do it on purpose. So it's difficult to figure out how much you're making.
Yeah.
The fees for the cell tower,
Uh-huh.
they actually go into the fees. There's a separate fund that goes straight into the general fund.
So that's part of the fees. Okay.
That's part of the fee.
Dr. Gilson, is there anything else you think you can present from the town side that would help us?
The town side or the school side?
Oh, sorry, school side. School
Or
side.
town side, anything that helps.
Sure.
Do you know what a treasure chest is?
Right. I wish I knew. I've got a money tree in my office thanks to Dr. Burnham. And I'm trying not to kill it.
I asked her please to make it grow the best she could.
So I don't have anything more to share right now. I don't know if anybody else does, but thank you for the opportunity.
I have a better understanding of how much I don't know, but I don't know if I have a good understanding of what we have. And so that's the thing I think we gotta be working on in the background is to figure out like, what do we have? Like Evan's question about like, why are they all divvied up? Why do we have an investment with $84 in it? That just doesn't make any sense to me. Like, I'm not a financial genius, but even I know that's not wise. You can ask my wife. I know nothing about finance. So I think we got clear that we don't know a bunch of things. And like Renee finding a fund that like essentially vanished is really kind of crazy. It's like,
I mean, there could be a good reason for it. We don't know.
Yeah. Right. But we don't know what it is.
Somebody's got to know.
Right. Like, to quote the late great Donald Rumsfeld, we now have a known unknown.
Yeah.
So
I mean, imagine if we find out some of those accounts, like the one that has $84, has a minimum balance and we're paying a penalty on it.
I know. I thought that the whole time. And it's like under $100.
That would just add insult to injury. I mean,
been paying like $20 a month for like 11 years. And it's just like, ah!
I think that's got to be a priority to get that straightened up and yeah.
We just need somebody to tell us what's the best way to have, because we have a pretty substantial chunk of change. We're just not doing anything with it. Like a lot of those had 0% return or 0.01% return. That's just giving away free money. That's the money tree in Dr. Gilson's office.
Yeah.
All right. Does anybody have anything else they want to add? I think we're coming to the end of the meeting. There was only new business on the agenda for next time. Oh, sorry. There's public comment. Does anybody want to make a public comment? Mr. Passios?
Thank you very much. Dave Passios, 56 Whiting Street. First of all, I am excited to hear the conversations this evening. What this committee has done is brought all of the people from all the sections of the town or that operate our town together in one committee so that you can kick these questions and information back and forth. This is something that's been lacking for a number of years. We have these conversations in individual committees. As Evan will attest, we've had a number of these financial conversations.
Oh, I lost his audio.
I lost his audio too.
I think he dropped off.
His lips are moving. Nothing's coming out.
Yeah, Mr. Passios, I think your audio went away.
His time limit must be up.
He needs a cell tower.
He does.
Got one 800 feet away and it doesn't help me at all.
There we go.
Hopefully I don't fade out again. I apologize for that. Let me get into 2 or 3 just very quick things, and you guys have met long enough. Quick note on CPA. The last attempt never got past the select board, so it never went to town meeting. And Carter's explanation of the history of the CPA was dead on. It was a good program in the early days when there weren't too many people drawing on it. It's not that great nowadays. So I just wanted to give you the background that I had on it. In relationship to the return on interest on the accounts that you spent quite a bit of time on, please, somebody on this committee reach out to the library trustees. They went through this process. I believe they completed it finally last year. It took them close to 3 years to work through the hoops, but they increased their return on investment at least tenfold. And I'll let them tell you what they did because I don't have all the details. And it was exactly what you guys were talking about. Money's being held in trust funds, and I believe part of it had to go to the legislature to be approved. But they did it, and their returns are great. The last thing I'll just touch on very quickly. Evan and I have talked about this, and I've brought it up in select finance committee meetings, and I think it's something that Lunenburg could be the one to slingshot this across the state if we can get enough people listening. There is a possibility of asking the state legislature for an empowerment act that allows cities and towns to assess a local income tax. My vision of that would be, it would take 2 to 3 years probably to do the whole process. My vision of that is that if you shift some of the levy burden to income tax rather than real estate tax, you shift it away from the low earners in town, i.e. seniors and young families trying to move into town and survive at Lunenburg. It's done in other states. The process was started back in, I believe, 2017 in this state, and it died in committee and lost. So there needs to be an empowerment legislation first, then it's got to go through the town, and then it can be set up from there. And I think there's different ways to set it up. Those are my comments for this evening. Thank you for your dedication to this, and have a great evening.
Thank you, Mr. Passios. Is there anybody else? I see Gene Russell. This person has joined us since the start of the meeting. Would Gene Russell like to make a comment?
Gene is the finance committee alternative.
Oh, perfect. Excellent.
I don't want to step on her toes. If she wants to speak, of course, speak, but I just...
All right. Jean is not unmuted or turned on her camera. I'm going to take that to mean that she has no comments she wants to add. So for next meeting, I think that basically a reverse or continuation of this meeting, that we look at expenses. The one thing that I wanted to do, largely because Evan talked me out of being crazy, was to just look at what are the unavoidable costs, our contractual costs, our statutory obligation costs, and then go from there. And then at the same time, we can sort of try to fill some of the gaps we have for the revenue stuff, like identifying what the miscellaneous non-recurring costs revenue was. And then I'll reach out to the library people to see if I can get a better understanding. And Evan or Ezekiel, if they start talking like real numbers as opposed to like tenfold, I might have one of you help me because I'm literally the worst at money. So just terrible. Other than that, does anybody have anything else?
So we're up again in 2 weeks, Tony, is that right?
Yeah, 2 weeks.
29th, okay.
Yeah. It'd be nice if these were off schedule from school committee meetings, but I don't think that's going to happen. All right. Well, if that's it, I'm going to end the meeting.
Yeah. Thanks everyone for all the discussion.
Thank you for finding money.
Thanks so much.
All right. Bye.
Bye-bye.
Good night.